Well, hello everyone. Welcome to this edition of Brainfood Bytes. I am Dalton Sweaney. I am a member of CalCPA's board of directors, as well as managing partner of GSA LLP, which is a small public accounting firm in Southern California. Today we're going to be talking about the rumored long-term care tax that California has been kicking about. I'm sure you've seen it on the news. And just for some context, this all started back in 2019 when a task force was formed, and they've been working in the background for the last few years. And at the end of 2022, that task force presented their first report to the California legislature. And they had some ideas there of what this tax could look like. And the legislature is now working through what to do next. The next step in the process is the task force is working with their actuarial services currently to figure out the funding and feasibility and all of that kind of stuff. And that report is due in January 2024. So we may get some more additional information at that time. It looks like this task force is mostly modeling it based on what Washington State has enacted. And Washington State has a 0.58% tax on uncapped salaries of employees. So it's not like Social Security wages where the tax is capped on the first, 150K-ish of wages. This is uncapped. So there remains a lot to be seen in how it could land for us. Is it going to be employee paid, employer paid? Are the wages capped? Are they not capped? One of the things that Washington State has done is it only has a $36,000 lifetime benefit amount, which if you think about long-term care costs, $36,000 is not very much. And then even to be eligible for that $36,000 max, you have to pay into it for 10 years. So it's something that is a low benefit for an additional tax. So it would be something that would be wise to investigate with your clients, encourage them to touch base with a few different providers and see what their rates are, what the benefit amounts could be, and then do some calculations and see, is that cost of adding insurance less than what this potential tax could be? Obviously, we don't know a lot. There's grumblings that some people think that this may go live January 2025. Other colleagues I've spoken with think that's a little aggressive. That's not too far away. And in order to get a new tax over the line, that's a little tricky. That takes usually a little bit more time and a little bit more working together to get over the line. So we don't know timing yet. We don't know rates yet. There's a lot we don't know. So for additional resources, I think you should stay tuned. That's kind of the summary. More information to come. You can always check out our website, calcpa.org. There's always information there, and we'll keep you up to date as best as we can. So be on the lookout for more things to come.